Hello, I'm Pete Thomas, and in this episode, I'm going to be speaking all about one of the things that I think is going to be the most important thing in 2025, getting paid. Now, I think 2025 is going to be a tough year for business. I'm just going to put it out there. Don't want to use the word recession. I don't want to use the word downturn, but I definitely think there's going to be a slowdown in business. When there's less money available for businesses, the research shows that accident rates increase, indicating that companies are less likely to spend their money on safety. So we know this year is going to be tougher, or we're certainly anticipating this year to be tougher in business. And when it's a tougher year, we know that some businesses from experience, they're going to take that little bit longer to pay those invoices, and cash flow is king. It's really important to get paid and get paid on time. So in this episode, I'm going to talk all about my tips, my experience on getting paid on time. But first, before we do that, a bit of an update on My Safety Consultant. So as many of you will know, we launched mysafetyconsultant.io, which is a directory for safety, fire, Legionella, environmental, asbestos, training, all of these elements that make up the safety within an organization. And we set up a directory for all these consultants because we felt that there are a lot of businesses that absolutely dominate Google. And let's be honest, if I was going to try and find a safety consultant, the first place that I would probably look is Google. A lot of businesses are going to look on Google for their safety consultants. And we know that the top of the Google rankings is absolutely dominated by a handful of massive safety companies, and the rest, all of those are the really great local safety providers who are great consultants, great fire risk assessors. They just never get found. So you're putting all this effort into creating these amazing websites, and I'm sure that you've looked at the analytics and the numbers just aren't increasing. And that's why we set up My Safety Consultant to really showcase you, what you do, and your website, and all of the services that you can offer to a business. At the moment, we've got some really great deals on. We've got some great deals on our annual packages. And at the moment, we're also building those profiles for you. So really for you, don't really need to lift a finger. Have a look at mysafetyconsultant.io. If you want to create a profile, drop me a message, info@mysafetyconsultant.io, or reach out to us, My Safety Consultant, on LinkedIn. Let's get on with the episode. So I think the first place I would start is looking at the contract. Now, it doesn't necessarily have to be a formal contract. You'll find some people will put the T's and C's on the back of a letter or an invoice or a purchase order, but it's looking at those terms and conditions, looking at the contract, looking at the agreement, and actually making sure that, one, you stick to it as a consultant, and two, that it's reflective of the services that you offer. Now, a lot of us as consultants, we don't have a huge amount of money to employ the best lawyers and solicitors when we first set up the company to get all these T's and C's written up properly. We end up copying them and pasting them, dare I say, from other contracts that we've seen in the past, and sometimes they're not perfect. I have one question for you. If it goes wrong and you had to pay out thousands of pounds to a solicitor, would you be confident that that contract would stand up in court? If it wouldn't, you need to have a look at it. Now, I'm not saying it needs to be complicated. It can be really straightforward. But if you say that you're going to provide the services within 14 days, but you know full well you're not going to get the information back to them for 28 days, technically you're in breach of your own contract before you've even started. It's things like that that are going to trip you up if it ever goes to court. Make sure that your T's and C's are up to date. That would be my first tip. Now let's look at a few practical things that you can do then. One thing, ask for payment up front. I started doing this, and honestly, I was surprised. It wasn't really an issue. In actual fact, you can set up an account with a company like Squarespace or iZettle, or there's tons of them out there. I'm not trying to sell them to you. Sign up on my affiliate link below and I get 50%. No, I'm joking. I get nothing for it, but just have a look at them because actually they're really easy to set up. And in many cases, you can now take card payments over your mobile phone on an app. You don't even have to pay for a card reader. But honestly, I started doing that, particularly for services like supply or replacement of fire extinguishers, where you're physically supplying goods that you've had to fork out for. And I would go and replace them. And then I would open up the app and say, okay, this is going to cost pounds X. How would you like to pay? And I always remember people looking really surprised at me, but no one ever argued. No one ever said, I'm not going to pay you for that now. I expect an invoice of 30 days, or I expect this. They all paid. How do you accept it? Whatever. Any card, credit card, doesn't matter. And actually, there were some occasions where we offered discounts for people to pay in advance in that way. But most of the time, we just asked for people just to pay up front. And if the job was quite far, so there were going to be a lot of travel costs, I would ask for 50% up front to secure the booking. And I would literally just ask like that. Would you mind paying 50% up front to secure the booking? We know we're going to have to order a lot of stock for the job, and there's a lot of travel costs involved. Most people go, no problems at all. How do you want me to do it? And then you could just go, I'll send you a link to the payment. Once that's done, then your booking is secured. I know it sounds so weird, but I always wondered why, if I were to go to Sainsbury's and buy my shopping, I wouldn't get to the till and go, I'll pay you in 30 days. Is that okay? Once I've supplied the product, then I don't really see why you should have to wait to be paid. So I would really recommend looking at some sort of product or system where you can take card payments on an app, on your mobile phone. Honestly, I think it's an absolute game changer. One thing that I would strongly recommend is to avoid concentration risk. There are so many consultants out there that are really, really happy that they've got that first big client. I know I was. And when I got that first big client, and somewhere in the small print it said 90-day payment terms, I hadn't quite factored all that in. Some of the work that I subcontracted, they were on 30-day payment terms, so they were expecting to be paid. Not only was I on 90-day payment terms, but actually they went overdue by probably a month to 6 weeks, I would say. So I had this massive cash flow issue in the meantime where I'd had to pay out for consultants to do work, and I was waiting for nearly 3 months to get paid for the work that I'd already paid out for. This is one of the downsides of working with large companies. Now, the issue with this in terms of concentration risk is because that was such a big client for me. I would say it was probably 60 to 70% of my income for that year. If something went wrong, if they had delayed any further, there was a real chance that was going to put me out of business. Or if they went bust, there was very little chance of me getting my money back. And at the moment, a lot of these very large companies, I'm sorry to say, are going into liquidation. And nobody wants to have done a load of work for a client to be watching the news one morning, Sky News, while eating Cheerios and going, so-and-so has just announced that they've called in liquidators. What a nightmare position to be in. So one of the things for me would be to avoid concentration risk. I was so excited to start working with some big names. Honestly, it's a real challenge, and I think it's way more challenging than people give it credit for. It can be quite rewarding, but I think you need to know the challenges that you're going to face. And if that contract is going to make up a significant portion of your year, then I know that nobody watching this is going to turn that contract down, right? I'm not saying that. I know you're not going to turn it down, but I think you've got to be very, very careful, and you've got to be very cognizant of the risks involved around taking that contract on. The other thing that I would say is if you are going to take contracts on like that, undertake credit checks. You can use a number of tools where you undertake business credit checks. They don't cost a lot of money. In actual fact, for some of them, I think it's only a couple of pounds for a credit check. And you can find any issues with that company that could potentially cause you not to get paid. I would highly recommend that. And if it's a smaller contract, but you still want to make sure that you're not going to pay out for the credit check, you can always check them on Companies House. You can always check the directors. You can always look at the company, have a look, and see if there are any red flags that would make you think that you could potentially not get paid. The other thing about working with the big clients, 90-day payment terms, and this is going to sound so easy to say, have an emergency plan in place for cash flow. For some people, I know you're going to message me and go, that's nice, Pete. I wish I had a plan in place for some emergency cash flow. I've just got to take the risk. I understand. But honestly, if you can have something in place in case that payment doesn't come through within the 90 days, then I would suggest that that would be a very smart move indeed. So what do you do when payments are delayed? Because there's always this balance, isn't there? You don't want to upset your clients. At the end of the day, they're your clients. You know they're going to pay eventually. and you want them to pay, right? So you're not just going to suddenly start threatening legal action. But at the end of the day, you do have to get paid, and this is really important. So there's a fine balance here as to how you escalate this process cautiously in a way that's going to yield the best results for you. And that is ultimately getting the money that you're owed. So one of the things that I always recommend is it starts from the very beginning. Starts from the T's and C's, the purchase order, the contracts, the agreements, the timeliness, the professionalism of the job, and how timely the invoice is submitted. Because some people, and I've been there, submit their invoices at the end of the month. In fact, I know some people that haven't submitted invoices for nearly 2 months. And if you're the type of person that submits the invoice 30, 40 days after the work and then expects the client to pay within 3 days, they're probably not going to do it. Because the fact that it's taken you so long to submit the invoice to them probably means that you don't need the money. It's not important for you. So that invoice can go to the bottom of the pile. I know that's not the case. One of the reasons why people haven't completed and sent the invoices is because they're so busy, which I can totally understand and respect. But I think you can also understand if someone's looking at paying someone and it takes them a month, 2 months to send through the invoices, they will think, well, I'll put that to the bottom of the pile because it's not that important. For me, as soon as the work is done, the invoice gets submitted within a couple of days. The reason for that is that it makes everything else easier throughout the process. When you're sticking to the 30-day timeline, it's 30 days from the date that the receipt has been sent to them, for example. So for me, on 30-day payment terms, the 30 days is from when the invoice is sent. Now, if I've delayed sending the invoice for a month, I've put myself on 60-day payment terms. And that's why, for me, it's so important to be on top of invoicing. So all of the invoicing on time, everything else is professional, and the client has gone overdue on the payment of their invoice. For me, a simple email straight away. One of the reasons why I like digital invoicing systems like Xero or QuickBooks is because you can set up automatic reminders. So it's much easier to send out that initial invoice, and then it's much easier to set an automatic reminder. And you can set that automatic reminder to come out every 3 or 4 days. And it means that you don't have to directly chase the client. It's set up as an automatic system. They will know that. And they're not going to phone you up and go, your automatic reminders that I'm not paying my invoices are very annoying. It's like, yeah, pay the invoice then. But I quite like those automatic reminders because it means that I don't have to pick up the phone. I don't have to email in the first instance. But again, you need to have a clear escalation. Once it goes over a certain deadline, a certain threshold, then I think it's important for you to email the client or telephone them and contact them and just ask them the question. Say, look, these invoices have gone overdue. I need to be paid them, please. When can I get paid? I don't know, probably say it nicer than that, but you know what I mean. Unfortunately, and this is terribly sad, but there potentially will come a time when further escalation is required and where clients just refuse to pay their invoices. And sadly, I've been there. I've been in that position, and it's not a nice position to be in, particularly when you need that invoice to be paid to put food on your table. One thing that I would always suggest is to have legal insurance. Now, I've had a mixed bag from legal insurance. Sometimes I've had great advice, and sometimes I've had very slopey shoulders. So I think it's worth doing some research, looking at what legal insurance works, what legal insurance doesn't. And I'm actually thinking on doing a whole episode on insurances, because I think there's some other elements to consider, like D&O insurance that we rarely talk about, but I think they're important to discuss. But legal insurance, actually, when it works, can save you an awful lot of time, hassle, and money. One thing that I have had to do is to send an email to a client to say I'm going to start claiming statutory interest on an overdue invoice. So there's some rules and regulations around this. You can find them. I think it's on the gov.uk website. I'll put the link below in the show notes. But it's around claiming statutory interest on overdue invoices. I think the standard is anything above 30 days, but I think it has to go 30 days above the 30 days. At that point, the interest is 8% plus the Bank of England base rate. And then there are some basic administration fees that you can claim as well. So not only does the overdue invoice require payment, but there's also the requirement to pay the interest as well. I have put that to a client before and they actually paid up and I never worked with the client again. And believe me, they went a lot more than 30 days over. I think it was nearly 6 months that I was chasing that money for. And to be honest, I wouldn't leave it that long again. I think if anyone is going to go significantly overdue their invoices, to be honest, they're probably not a client that you want to work with. I've never used a debt collection agency. I've seen a lot of positive things about debt collection agencies. I think one of the things I thought was that you had to win a successful court case in small claims court in order to bring about the services of a debt collection agency. That's not true. I believe they work in a number of ways. One is on a flat fee to collect the debt. Another is on a no-win, no-fee. So this would be a percentage of the debt recovered, and it would be a higher percentage of the debt. Or you pay them a percentage of the total amount outstanding, which I think is a lower percentage. I think you have to provide them with the information, including the T's and C's, including any agreements, emails, contracts, etc. And all of that is used as evidence to justify the collection of the debt. Look, at the end of the day, we're all really, really busy people. I suspect once you've got to this point, you've lost that client for good. And actually, it's going to be a pretty shaky relationship going forward. But at the same time, as a consultant, you're the only one doing the fee earning work. So if you're running around trying to collect debts all day for work that you did 6 months ago, not only is it wasting your time, but also you're not earning money while you're collecting the debt. So although this sounds quite an extreme option, I actually can see the benefit of it. So I mentioned earlier about Cashflow. There is another option regarding Cashflow, which is invoice financing. You may have seen this offered by your business bank. And to be honest, I would be quite cautious about how you choose for this, if you choose to do this at all. But ultimately what happens is you submit the invoices to invoice financing. And then rather than have the cash flow during whatever terms that you have, i.e. 30, 60 or 90-day terms, the invoice financing will pay you a percentage of the invoice up front, say 70 to 90%. They will then charge you a percentage interest on that money up until the point that the invoice is paid by the client. So it is not cheap. And at that point, when it's paid, you get the rest of the money minus the interest and minus a service fee. Ultimately, it's going to cost you a lot of money. There is also, to me, there kind of felt like this element of professionalism, should I say. It felt non-traditional for the bank to be invoicing my clients and not me invoicing my clients. I don't know, something felt unusual about it for the types of clients that I was working with. So I've never actually used it. More than happy to hear your opinions if you've used it and if you found it successful and why. But the reason why I bring this up here is I believe there's two types. I believe there's recourse financing and non-recourse financing. Recourse financing is the most common. It has lower fees. I say lower, they're still pretty significant. But if the client doesn't pay, then you're responsible for paying for whatever finance you've had. So effectively, you have to reimburse the bank. In the event of non-recourse financing, the bank will pursue the client for the outstanding debt. Now, again, I'm not sure I like either option here, but if you work in a particularly risky industry, in terms of businesses going bust, then non-recourse financing might be an option to explore. You're going to take less money, but you don't have the risk that they're not going to pay at the end of it. And if you have really long payment terms like 90 days, or I've even seen some companies with 180 days, at least you know you're not going to have a short-term or medium-term cash flow problem. So that's all I've got for this episode. I think, touch wood, clients not paying is very unusual. I only ever had one client that didn't pay. I do think there are some things that you can do in the meantime in order to reduce the risk of non-payment. Always check that contract. Again, doesn't have to be complicated. Dare I say it? You could ask AI to go through it for you. I'm not giving legal advice here, and I'm not saying definitely do that, but it's up to you. There are reasonably cheap ways of getting contracts looked at nowadays. The other thing is always balancing those client relationships. But of course, there comes a time where if you have a client that is so late paying all the time, then maybe they shouldn't be your client anymore. But whatever you do, take action now. Don't just ignore this, because honestly, I think As businesses struggle, as cash flow becomes tight in 2025, I think more and more businesses are going to be in the position where they don't want to pay invoices on time. And it's not through choice. I just think they're going to be a lot slower releasing that cash than they were before. So that's it. But I'd love to hear from you. And in the interest of this will be going out as a blog on our website, mysafetyconsultant.io. And as you know, any feedback that I get, whether it's messaged to me at info@mysafetyconsultant.io, whether I receive a message on the LinkedIn, or whether you make a comment directly on the YouTube page, I'm more than happy. Please provide me with your feedback, because in the past we've had some really great feedback from our members, from other consultants, where they've provided their advice. And what we've done is we've actually incorporated that advice into the blog so we can help other safety consultants. If you've got any great advice, if you've used invoice financing, if you've had to use debt collection, if you've actually applied the statutory interest on an overdue invoice, let me know. I'm honestly really interested to hear and really interested to share those lessons with the wider safety community. As always, thanks very much for listening. Please hit that like and subscribe button. It really, really does make a difference to the success of the show. And thank you very much.